All right, how about now? Yeah, I think we should be good. I think we're good now. Let's give it a second. Give it a second. Yeah, we're good. Sound should be on in a sec. Okay, let's get to it. Let's get to it. All right. So all I was saying is hope everyone got some time away from the screens and some time away from the markets. Got to spend some time doing something other than trading. All right, so we are good to go. Just had to move the mic around. Sometimes you got to jiggle this thing. Probably tells me I need a new wire. All right, no worries. All right, great to see you. All right, let's get to work. First of all, as we are kicking off this week, I think anything that we're going to be dealing with this week is probably based on FOMC. Although, if any one of there's three major events happening this week. If you haven't taken a look at the economic calendar yet, all right, the sound's a little soft, huh? Weird. All right, let's see what we got here. Bear with me. I'm always gonna. Let's try that. I don't know. Not too bad. It could be louder. Yeah, I don't know why it's quiet. Thanks, bot. I do not know why it's quiet, but yeah, just for today, crank up the. It's a little bit better. Okay, yeah, crank up the audio, and I'll check the mic here in a moment. Not like a live show, fixing stuff on the fly. All right, bear with me one moment. Let's see what we got. All right, I'm not going to mess with the mic too much here, gang. We'll make sure we are good for tomorrow's show. All right. Should be good. All right, so back to our show. All right. So what I want to do to kick things off is remind everybody that if any one of the three following events were to happen on any given week, that would be the major driver of psychology and of price action. But when you take a look at take a peek here. Oh yeah, a little thing called the FOMC decision on rates, which, believe it or not, is probably not going to be as dramatic as we're all maybe anticipating. I'm actually not anticipating drama at all. They are, number one, they're going to hike a quarter point. The press conference and the statement might be where it gets interesting, because if the statement starts to suggest what we're seeing in CPI already reflecting, which is inflation's ticking down. In fact, I have this cool link. I think it's Trueflation or something like that. And it basically shows that inflation's been trickling lower. So if they cite that as primarily what they're noting as well, rate hikes are done. In fact, it's largely expected that rate hikes are done. If you take a look at the FOMC Fed Fund Target Rates futures contract, that's a lot of F's. If you take a look at that, you'll notice that expectations for another quarter point hike after July 26 are very, very slim. In fact, the probability is to hold, and then after that is a possibility of another quarter point hike. Of course, it's going to be data dependent, mostly inflation. But let's just presume, based on the data, that this is going to be it. If the press conference and the rate statement echo that, equities are going to be happy, head higher, bonds are going to be happy. Keep an eye on the long bond, the 10-year, the 2-year. And then we will quickly be readjusting to the reality of this week, which there's another economic calendar that we have to be aware of. And I know a lot of you probably already looked at it. This is Estimize, by the way. You can see the spelling there in the upper left-hand corner. Estimize is the way that I like to track earnings, not because in any way am I interested in trading Microsoft or Google or Intel or Amazon this week. For me, that is not what trading earnings is about. For a lot of traders, they like to trade earnings the week of or a couple of days before. And by the way, gang, there's nothing wrong with that if your earnings trading is geared towards selling options, because the the heightened implied volatility favors those traders who want to write options or sell options, yes? But for traders like myself who are directional debit players, I keep it very simple. I'm looking for puts, I'm looking for calls and playing the direction, then this window 7 to 14 days inside of earnings becomes problematic because now we have that higher expectation of whether or not vol crush is going to be a problem. Now, vol crush really isn't an issue as long as you get out before the release, right? So if you're thinking about being one of those traders who's going to hold a directional debit bought within 7 to 14 days of earnings, it better be a blowout in the direction of your option. Otherwise, that volatility crush, think of it as an implosion of premium, is likely going to hit what's happening in your trade. So please keep that in mind. It's a tricky, tricky time to be trading. And far better off to think about not anything this week. You know, if this is the week of starting off with the 24th, I'm actually moving out into minimum. I would not look at an earnings. Let's see, this is the 24th. So I'm not looking at anything any closer than the 7th of August. Now, there's plenty of earnings still to come. So you might say, Rob, where would that put us? That put us out into Lilly, UPS, Disney, Home Depot. These are still great names. These are still great opportunities still to come. AMAT, Lowe's, right? NVIDIA. Not inside 14 days, outside of 14 days. And that's where Estimize is so great because I'm not getting a bunch of cute logos and what's going to happen this week, right? And I hope that explainer is going to walk you through what I'm thinking about vol crush and implied volatility and playing these directional debits. I get a lot of questions about that this time of year, at least 2 weeks out, at least. All right. Okay. So let's get to it. We talked about the earnings this week. We talked about FOMC, and the very last hot zone for this week is the core PCE. And again, if the core PCE was the only hot zone we had this week, that would be significant. This is the Federal Reserve's pet inflation gauge. They love this one. If you want a good laugh, go take a look at the way the CPI, which most of us living on Earth, dealing with the inflation on Earth, tend to watch. And then there's the Federal Reserve's favorite PCE. Go take a look at the differences of how they're measured if you want a good laugh today. Doesn't matter how ridiculous this number is. All we need to know is it's the one that the Federal Reserve uses for their models. So you think it moves the market? Absolutely. That's going to be 8:30 Friday. And so any one of these events would be huge. All of them are happening this week. So keep that in mind. We got plenty of volatility coming up. All right. As always, we have our questions coming in. Awesome. And I do want to mention, and I don't know that I have it handy. There we go. I do have it handy. All right. So I do want to mention we have a webinar. It's right around the corner, August 2nd. So not this Wednesday, but next Wednesday. So August 2nd, Wednesday, 8 p.m. I'm going to walk you through things that I'm doing right now that are moving the needle in the Sector Secrets Mastery, how we're trading futures, how we're trading options on stocks and ETFs, how we're day trading futures, options on stocks and ETFs, and even longer term positions. I'm going to show you the 3 different sort of windows, if you will, of the types of trading we do. It could be very short term, maybe just the current session. It could be short term swings or even long term swings, you know, maybe 1 to 3 days or 2 to 10. And then in an environment where if we are concerned about some kind of significant correction, how do we get proactive with that on a longer term time frame? How do I take advantage of these significant moves? And how do we take advantage of building a portfolio of positions that we might hold for 6 months or longer, right? So as long as we keep in mind time frame and time horizon, all of a sudden we could slice the market up however we choose and take advantage of different moves based on how long we're willing to commit to that particular position. So it's a very cool time to be a trader. And despite all the chaos, it's actually been a pretty cool time to look for opportunities because nothing hurts us more than stagnant markets. And that's the opposite of what we've got right now. All right, so let's get to it, gang. Type in those questions and we will jump into it. And first up, James, how you doing, my friend? Mr. James Harris. All right, thoughts on Lennar or Toll? So let's start here, James. Let's start with that estimize. And remember that if I'm looking at Lennar or Toll, where are they in that window that we talked about? So obviously, you know this, James. I'm just meant this for the rest of the group here. James is a member of our Sector Secrets Mastery, and we have plenty of time. So Lennar, 57 days, definitely outside any. Oh, by the way, gang, Estimize, you can sign up for a free account. I do have a paid account, but you don't need a paid account, especially for the tracker that I use. You can sign up for a free account. So I do want to make that clear. So Lennar, 57 days to earnings. So obviously that's next quarter. And then Toll is a little bit more near term. So let's talk about Toll, right? And we're looking at inside day on the daily. Okay, so let's take a look at the daily on both of these with emphasis on Toll. All right, so that's the one coming up. Daily time frame. And overall uptrend, which I love for any kind of run or rally or set up into earnings. Let's just buy the dips on the way to ultimately the move. One of the things that I know has been a problem for me personally, James, is not the setups on Toll per se. I like where Toll is on the V-score right now. This is an indicator that I created many moons ago, coming out of 2008, looking to coattail volume in the wake of the 2008 financial crisis. What better way to coattail folks who know a whole lot more than we're going to know as retail traders about where the market's heading than the folks who are moving the size around, right? We always talk about smart money. It's not necessarily smart, it's big, right? And so if we want to coattail that movement, it's always volume, gang. It's always volume first. And that's where the V-score comes in. So V-score's got an interesting reading right now for Toll, and it's coinciding with that inside day. Absolutely. And then let's go take a look at this from the perspective of the wave and do this again. So the wave would be my preferred mean reversion. We just touched that on the 20th. So that did tag the top line of the 34 EMA wave. That's the 34 period exponential moving average on the high. That did tag that level. So James, I like that you're waiting for the inside candle. I would recommend the same thing. Let's see if Monday can complete that pattern and get us long. I'm with you, but please be aware that the liquidity on these, depending on the strike that we need, can be really spotty. That could be a real problem. And Lennar ditto, although Lennar, unlike Toll, never did tag the, as you can see here, the 34 EMA wave. So no mean reversion and not quite a V-score low. I would have needed a low that mimics something that we would have seen on the 14th or even the 6th of July. So I'd say I like Toll a little bit better. All right. Good stuff, my friend. Great to see you. Next up is, all right. Will the reallocation on July 24? So John, the reweighting had to be done by the close of Friday, July 21. By 24, we're going to be trading the brand new recompositioned, reweighted NASDAQ. So the question is, now that we're opening to what we were expecting, does it pop or drop? Great question. Great question. This has implications that would, of course, affect NQ, MNQ, QQQ. I do believe, John, based on what we know now, we've got the reallocation behind us. And now moving forward, the question is, what are traders and investors looking ahead to? And I'm not sure it's the reallocation any longer. There is an overall uptrend here. However, I think the main thing to keep in mind with the NASDAQ is, well, two things. John, I guess my first thing, and this is something I dove into in the top tier outlook this week. So if you're looking for a way to start your week off with sort of a top tier, right? Big picture, top of the mountain type view. I still have the old URL pointing to the newsletter, which is thisweekinthemarkets.com. Thisweekinthemarkets.com. You can check out Top Tier Outlook, and you can check out a trial if you'd like. Or, by the way, I don't want to ruin the surprise, but I don't want it to be a surprise. On August 2nd, we're going to be announcing something we seldom do. And that is, I do not have a standing trial in the mastery. It's something I've chosen not to do. And instead, once a year, or even if that often, we have a trial that we have for a specific month. So for that month, I know we've got new eyes. I can onboard the folks that are coming on fresh to the Sector Secrets Mastery in the best way I can to support you all, rather than throwing you all into a random mosh pit of some trial where you're catching me in the middle of whatever phase of trading we're doing. I know that everyone's going to be starting and stopping the trial on the same date, and we can do a lot more, especially during the summer months, which is when I love to do this. We can do a lot more in terms of getting you all started and onboarded, and without a lot of pain and misery, rather than sort of this, hey, welcome to the mosh pit, and the music starts playing. So that's going to be what we're offering. It is a $7 trial. That's going to take you through basically August 3 to September 1st, right? So that window. And that's going to be a layout that I'll give you all. That's going to be a lot of goodies, alerts, etc. So that's what that is. The reason I bring that up is part of the mastery is access to the Top Tier Outlook. That's included in the mastery. So rather than paying another $79 a month for it, although for those of you that are not in the mastery, and we had some really great deals on that earlier this year, but if you want to get into the mastery, you get that newsletter as well. Anyway, in terms of what's going to happen with the NASDAQ, John, I would tell you this. I don't know that I would prioritize the NASDAQ, right? And here's why. Microsoft, Intel, Amazon, Google all have earnings this week, which means these heavily weighted, and they're still heavily weighted, gang, make no mistake about it, whether it was, obviously reduced. Microsoft, NVIDIA had the biggest reductions in weighting, regardless of the reduction, right? The thing to remember is that we're going to have even more volatility because these heavily weighted names could have outsized moves. And considering the pressure the NASDAQ had, as many of these high weighted stocks were at least lightened up because of the weighting shift, and in tandem, healthcare and financials, XLF and XLV have come on strong. I got to tell you, John, we might be better off not focusing that much on the NAS. So I guess for me, I'm not that concerned as to whether or not it pops or drops on the open, because I'm not necessarily sitting with a huge amount of tech exposure or even NASDAQ exposure, not a huge amount of it. And so for me, if you ask me, Rog, what would be your expectation? I would expect a little bit of strength. But again, I'm not going to prioritize this index, nor the XLK, XLC, or XLY. All right. All right. So that's the way I would look at the cues. And I kind of would love everyone to be a little apathetic to it this week because of the earnings that are coming out. And then also remembering that the surges that we've been seeing in terms of sectors have been really those sectors that would benefit the S&P and the Dow. So sometimes it makes a lot of sense to ask ourselves, is this really the best place to focus my attention? Or are there moves happening in other corners of the market that are worth keeping an eye on? So just another way to look at it. All right. So thank you for the question. Really good question. All right. We have next question coming up is, what do I think? Hey there, Mike. What do I think of Yum? All right. And Walmart. Okay. So first up is Yum. Yum is choppy, my friends. So what do I think of Yum? Generally, since it's north of the 200, which is established really going into June, since it's north of the 200, something that you can see here, test back on the 13th of March, another test back here on the 30th of May, 31st of May, and then launching higher June 1. Generally, I would be bullish, and specifically from the 200 propulsion, which are those white dots that represent a cross of a fast and slow exponential moving average. In the case of the white dots, the 8 and the 200. So I can't say this would be high on my list, but if it comes back down to the 200, yeah, I'd be game. The next question is Walmart. So I want to be a buyer of Yum, but far lower than we are right now, Mike. The next one is Walmart. Walmart's been going back and forth between an uptrend and chop. So I'm a little bit more bullish here. And if it's going back and forth between an uptrend and a chop, probably then the best way to trade Walmart would not necessarily be in mean reversion or moving averages. What I mean by that is not necessarily a 21 exponential moving average or even the 34 EMA wave, but rather the daily price movement ranges, the historical volatility patterns that allow us to see what the typical support and resistance based on historical volatility are for this symbol on the daily time frame, and wait for something like that. The last two, just so you can get an idea of Rogwell, how well does that work? Last one was on the 7th. The one before that, by the way, was on the 30th, and the most recent was on the 20th. So if you say, oh, okay, that resonates with the kind of buy the dip, buy into support type setups I like, then you're going to love the DPMRs. That's the way I would set that up. So until it comes back down to that level, I'm going to be on the sidelines, but that's on purpose, right? Just like a great major league batter, we wait for our pitch, right? We're going to be there. We know the pitcher is going to throw something at us. We don't know what it is. However, we do know what we want to see. So I will sit there until I see what I want, and that's going to be price in that gray area. And remember, as Grandpa Buffett tells us, and I love how he talked about the circle of competence, and he has a picture in his office. There's not a lot in his office. There's two things he's very proud of. If you watched Becoming Buffett, which I would recommend to everybody, he has his certificate from Toastmasters, and he also has a picture of the legendary image from the book, Ted Williams, with the bat in his hand and the strike zone. And I think his face is superimposed on that image. I can't remember that or not. But those are two of the things he's got hanging in his wall. And he reminds himself, you wait for your pitch. And then he also said something really interesting. Us traders and investors, we trade in a no strikes called game. We can sit and watch a million pitches go by and still be at the plate, right? The market can't walk us. It can't strike us out, right? And so I remember that I have the luxury of just sitting and waiting at pitch after pitch go by until I see the one that I want. That's the one that I would want, Mike. Thanks for the question. All right. So what are my MACD settings? RJ, I don't have the MACD running on this, but on the MACD, I used to regular old MACD usually set on the default. The most popular default that I've noticed over the years is a 12-26-9 MACD, a 12-26-9 MACD. All right. And if you have any of the layouts that I've shared with traders, whether it's from my class or maybe it's in the mastery, what I've done is I've taken that 12-26-9 and turned it into a label. And that label allows us to save real estate on our chart rather than having yet another indicator sitting at the bottom of my screen in a subchart. I've reduced the reading into a label because I don't need to see the shapes and squiggles or anything like that in the indicator. I'm not a fan of shapes and indicators, right? What is the reading? Binary, objective, not subjective, right? So I'm not a big fan of crosses and cutesy things like that because that's where the subjectivity comes in, right? Don't want to be there. I've seen that kind of analysis my entire 3 decades, and I found that it is incredibly difficult to say the secret squiggles crisscross in that magical way. It won't do it. Either the reading is what it is or it's not. So you can reduce it to the reading. And RJ, all I'm interested in is above or below 0. That's simple. It's really more of a bias tool for me, directional bias tool. All right, NVIDIA. Hey there, Mr. Walker. So taking a look at NBDA. So anytime we're looking at a stock right now, and I know we've done this a few times, but probably as good a time as any to bring it back. I always want to make sure I know where I am in that 6-week, 4-week, 2-week window. 2 earnings. You'll notice we're 30 days out. No problem. Perfect even. All right. Now, the question is, if the SMH and the QQQ could be volatile this week, do I really want to dedicate time to NVIDIA? Gang, probably one of the best things I could say right now are, number one, do we really need to trade tech? There's so many other sectors and indices that have come on. Now, I know if we were talking 6 weeks ago, 4 weeks ago, even 2 months ago, we would still be predominantly focused on the relative outperformance of the technology, communication, consumer discretionary, semiconductor, and the NASDAQ itself, right? Those sectors in the NASDAQ. But the S&P is in a very good uptrend. And the financials now are in an uptrend. And the Russell is now in an uptrend. And so coming off the heels of that rebalance and going into what is going to be a pretty interesting series of tech releases, I gotta ask myself if I really want to be dedicating that much time into some of these names, especially names like NVIDIA and Microsoft that have been hit the hardest by the rebalancing. That said, a lot of me is wondering, I love that they were hit hard. So let me talk about the other side of that coin. So please be very, so I guess the first part of that is, please be very discerning about how gung-ho we are about tech. But the other part of it is Microsoft and NVIDIA are especially interesting to me because of how hard they were sold off with their reduction of weighting. If we can get to that Darvis, which coincides with a gap close we see a gap here from the 12th to the 13th, and there's a Darvis sitting there as well, that could be an interesting level to start looking for a long position. All right. So I would definitely keep an eye on that. All right. Mo asks, am I not using VWAP anymore? Oh, gosh. Yes, I'm absolutely using VWAP. I use it intraday, Mo. So what I want to show you all, I think you can see this on your screens. Hang on. Let me show you here. Do you see those 4 little windows that popped up along the bottom of the screen? Those are all the different layouts that I am running of TOS. So one layout prioritizes my TOPS tools, my wave, my grab, my propulsion, my Darvis. Another layout, and here's your V score and VWAP and V profile. Absolutely, Mo. I never abandon old tools. Absolutely not. If something has made it to my screen, it's because it's been something that I've seen as valuable, not for months, not for weeks, but for years, if not decades, right? So yeah, I have a layout dedicated to it. And even on this layout here, I've got, especially intraday, take a peek. I've got my VWAPs running there. That's the aqua colored line. So I still use anchored VWAPs. Absolutely. Absolutely. All right. So MACD settings we covered. And let's see what else we have here. Yeah, Mike, I'm super excited about the trial. And the reason I'm going to mention it a lot, gang, is because I get asked quite a bit about a trial. And I do not offer trials all year long because I do realize if someone's starting off fresh, on a trial, they might be starting from scratch, right? And they're not going to necessarily be with me for 3 months, 6 months, or even a year, which most members in the master are with me for a year, right? They dedicated and said, Rog, I've seen you in Charts and Coffee. I've taken a class. I'm here for the year. And that allows them to absorb everything at a different pace, right? But if you're going to be with me for 30 days, and for me to be able to walk everyone through that in the most effective way without people feeling frustrated and lost, we've got to minimize the times a year that I do this. So this will be the only trial for the foreseeable future. I don't even know if we're going to do one next year or not. Just depends on whether we can schedule it during a time where I can dedicate the necessary energy and time to you all to make the trial worth your while, right? So that's coming up. So that's why I'm mentioning it. That's why I'm mentioning it. It will be for the month of August, and that is it. Okay. All right. Next up is, I think, the last question for the day. Oh, could I put the link, Mark, in the, in here? Sure. And I think I mentioned it in Friday's video too. It's simplertrading.com/opportunity. Yes. All right. Okay, gang, that is a wrap. I will see you all tomorrow for Charts and Coffee. And Let's see. Oh, we talked about the economic calendar, talked about top tier outlook. By the way, just a quick sneak peek. We're going to talk about the Federal Reserve implications in this week's issue. After all, this is the top tier outlook show. We're going to talk about staples, healthcare, and utilities. What are the sectors on the move? We'll be talking about that because if the sectors are moving, gang, that's how we're going to build our watch list. And I am going to get into watch list building discussions on August 2nd. So if you're wondering, Rob, do you use a scanner? I do not. I don't like them. I do not use a scanner because scanners don't use relative outperformance. And if the rebalance of the NASDAQ did not remind us that relative outperformance and weighting matters, I'll be getting into that for sure. And the last thing I'm going to be talking about is earnings and the implications to the NASDAQ. And I've talked a little bit about that here. There could be some interesting post-earnings setups. I'll talk about those in this week's issue as well. All right, gang, be good to each other. I'll see you tomorrow.